I think that during one of the last calls, you said something about is there any is there any formal metric for cash flow to value that you use, or how do you quantify value of a company?
Well, your value of the company typically is going to be a combination of things. So it's going to be your calculation of your seller's discretionary earnings or your EBITDA,
Hmm.
depending on whether it's management, whether it's middle market or main street. Okay, so whether it's going to be owner run and managed versus manager run and managed. Um, and then there's a multiple that gets applied to those earnings. So the equation actually is pretty simple. So your business value equals earnings times some multiple. Now the earnings is either going to be your seller discretionary earnings or your EBITDA, typically. And the multiple is going to vary depending on a lot of factors, but what is the industry? So, for example, medical device manufacturing has a higher multiple, just because of the industry, just because of, the manufacturing medical devices instead of some other widget. So it's going to get a higher multiple. The software companies, any kind of business that has recurring revenue is going to typically get a higher multiple. Um, the and the level of your SDE or your EBITDA. If your SDE is under 100 grand, you're looking at probably a multiple of maybe 1 to 1.5, maybe two tops. And that's only if it's like up at 80, 90, close to 100 grand. If you're above 100 grand, then you're generally looking somewhere between maybe 1.5, 2.5. But it depends on, let's say you have a business where there's 10 employees, but four of them don't have proper documentation to work in the United States. So that's a big risk to a buyer coming in. They need to either replace 40% of the workforce or take on that risk, which depending on what state you're in, it may or may not be a big deal. California, it's a huge deal. So penalties are ridiculous, and penalties are like $19,000 a day per employee. I mean, it's literally, it'll just shut the business down. So the, there are a lot of things that can go in that can affect those multiples. Um, let's say the business is doing 500,000 in SDE. Well, now your multiple is probably up around 3.5. Or once it gets into 1 million SDE or 1 million EBITDA, now you're up between probably 4 to 6. So the multiple, that's why business valuation it's an art and a science. The science is a simple math, and
Hmm.
and calculating the SDE, the EBITDA, and all that. I mean, it's pretty straightforward. It's math, but
Hmm.
then there's an art to it, and the art comes and it's just understanding and kind of knowing where the market is at. And one thing that becomes critical right now, especially with businesses that have lower cash flow amounts, the financing, because the interest rates are so high. you know, if the business is only kicking off 80,000 in cash flow, and the seller, the buyer, the bank always wants the buyer to have some revenue, right? They're going to assume the buyer is going to be needing some cost of living allowance, right, from the business, unless they have an outside source of income. So if you only have 80 grand to begin with, and then depending on what part of the country you're in, you take 50, 60 grand away from that. Now you've only got 20 grand left to cover debt service. So it's going to be very difficult for a buyer to get a loan on a business that has a low cash flow like that. And so because of that, now you're looking at that multiple being maybe 1 to 1.5, because
Is there
there's no third party financing available.
is there a specific course through the IBBA that you would recommend for this subject?
Yeah. Yeah, their educational summit, it's a 3-day program. And it's IBBA, it's course 210, 220, and 221. and it's on valuing and pricing businesses.
Cool. You
And
said
that's what it's all about.
210, 220, and 221.
Yes. But they give it in a package deal. It's called an educational summit, and they offer it several times a year. I think there's one in January that's sold out already, but I would look at, just watch IBBA's event calendar and look for a summit, and I would highly recommend it. It's required for your CBI anyways, that
Cool.
education
Yeah,
summit.
I figured as much. Yeah, so
Yeah.
I'll probably be doing it this year regardless.
Yeah. So, and it'll get you, it'll get you further towards that CBI credential. So good thing to do. But it's all about, recasting. They go more into, some of the databases and doing comparables, trying to pull comps. Um, that you could have two liquor stores on opposite sides of the same intersection, and one could be worth $500,000 and the other could be worth $2 million,
Hmm.
having nothing to do with real estate, but only based on their revenue, their sales, their revenue, how much they're declaring, because that's the other problem oftentimes with cash-based businesses. Uh, they don't declare all their income.
Hmm.
So if it doesn't show up on the tax returns, it doesn't exist. Um, So yeah, and so when you're going to those databases and trying to find comparables, you don't know whether inventory was included or not included, how much inventory there was, if it was included, um, what the status of their, employees. I mean, how many hours a week was the owner working? Was the entire business run by the owner and the owner's family? The databases don't factor any of that stuff in. And so it's very difficult to find true market comparables.
Hmm.
I remember one of the instructors, guy named Ron Johnson. He is one of our instructors for CAB, but he also is very active in the IBBA. He said if you take all the data that's in like BizComps over all the period of time they've been collecting data, the median is like 2.3 times multiple. For all businesses, all over all time, it's like 2.3.
Cool.
So, but you get a feel for it after a while. You get a feel for what multiple is going to work um, in within the business sectors. You also can use Business Reference Guide, which is free to you with your IBBA membership. So you have Business Reference Guide online, and that'll give you rules of thumb, and that's what they are, rules of thumb. They're sanity checks. So I wouldn't ever try and use that hard and fast, because again, it doesn't tell you a lot of what's been factored into those rules of thumb. So, but there is good information, the Business Reference Guide online.